This question comes from Ryan Harding, and it's about the new 15% corporate minimum tax rate. As he sees it, its implementation is currently understood. He thinks it, as he understands it, to apply over rolling 3-year periods and to be based on reported earnings. First, does the inclusion of unrealized gains and losses in reported earnings under the current financial reporting standards contribute to the calculation for corporate minimum tax rate purposes? And could it potentially convert some of those notional deferred taxes into cash taxes, even if a rise in the market price of a major holding is only temporary but rather extreme? And then second, could it reduce the effect of some of the renewable energy tax incentives and others?
Yeah. I think the answer on the second part probably is no, but I don't want to say it is for sure because he's asking the same questions I ask of Mark Hamburg, who's the smartest guy on combining understanding of business, understanding the tax code, understanding SEC rules and everything else that you'll find in corporate America. And these questions, the particular question on marketable securities, I don't think has been answered yet. And I think that there are a number of things about the new Tax Act that were not enacted. But I would say this. We have said ourselves what we think the proper approach to operating income. We didn't design that because this tax law came along some years back. So we would think that you wouldn't include capital gains, unrealized capital gains, in, but we've got enough. I think, no matter how things turn out, the 15% tax doesn't bother me in the least, and we can figure ways once we know the rules where we will pay the 15% tax. And we were paying 52% taxes, federal income taxes, when I bought control in the partnership of Berkshire Hathaway. I mean, the tax rate come down dramatically, and the deferred tax that was embodied, for example, at Sanborn Map, when I was involved in a system that was allowed under the tax law to avoid that tax, but that was a huge tax, 52%. So we will live with this tax code, and we do not think corporations are overtaxed in the United States. And and I think that the conversation about how we lose out to the world and all that sort of thing is really nonsense. But we've got a new law that hasn't yet, the regulations haven't been written on, and when we know what the game is, we will absolutely figure out a way to pay 15% every year, and which generally we've been paying anyway. And as I pointed out, if there were 1,000 corporations in the United States that paid what Berkshire has been paying, nobody else in the United States, no individual, no corporation would ever pay any income tax, Social Security tax, gift tax, estate tax, anything else. 1,000 like Berkshire Hathaway would produce the revenue that's being produced by the federal government, that's being derived under the present tax code from everybody in the United States. And I don't feel badly about that, and I'd love to get it to what it's 1/500th or something of the sort. But I'd like to do it. If we can do it at this rate, I'm happy to do it. I think we are privileged to live in the United States, but we also have to control spending, and that's something that Congress doesn't quite like to do, and they didn't like to do it when my dad went to Congress, but they've dug in more as the years have gone by. Charlie?
Well, we covered this subject earlier.
Yeah. Okay.